This is Erich from Traders Helping Traders with your weekend market update for the currency markets. Let's take a look at the September Canadian dollar, which for some time now has been trapped in a bit of a sideways trading range. You can see that the market, actually since the beginning of the year, seems to have been stuck within this rather confined range. So we're trading in between the highs, looks like around 101.75, and the lows more or less right around here, around 96.75, 97. Last week we had the market put in support again and then continue to rally. Just before that we had the market put in support, so we actually have a double hit on support here. Technically, the market is still in a downtrend because the 5 moving average is trading below the 20 moving average. And you'll notice that on Friday, we got a reaction right at the 20 moving average line, which we know is a significant source of support and resistance for us. So what I would look to do this week is I would look to sell the Canadian dollar on a move through Friday's low. Now Friday's low was 97.96. I'd probably give it about 7 ticks, so we're going to want to enter 97.89. Let's see if we can afford to cover the trade on the high, which was 98.95. So if we place our exit just on the other side of 99, that should be all right. And that's going to be a little bit over $1,000, about $1,100 at risk, give or take. Our profit target would be the bottom of this trading range again. And it's going to look something like that, where we're going to potentially make about $800 or nearly $900 with $1,000 risk. Now, that would be kind of our ultimate short-term target. I would actually tighten it a little bit more, just so that we can get in and out with a higher probability of success. So when we clean it all up, we are looking at selling Friday's low at 97.89, covering above the high, that's about $1,100 risk, and taking profit before we get down to this confirmed support area from the week before. Now this is a higher risk trade, and I will tell you because the 5 moving average, you see how it's starting to slope up and it's actually supporting the market, kind of cupping it. A lot of times we'll see that happen before we see prices pop and rally, and if they rally, well, you know they're going to go right back up to here. So it is possible that you could bracket this trade to go either way, but I'm going to go with the trend side at the moment. Now, in that same vein, we have the September yen. And you can see it's pretty much the same kind of picture. The market's come down, put in support a couple of times, and then by the end of the week, we saw a little bit of a rally. Now, technically, this market is still in a downtrend. However, we have that cupping action happening again. And with the strong finish on Friday, it does look like we could get a little bit of a counter-trend move happening here. I don't normally recommend counter-trend trades, but if you decide that this one's for you, it would probably look something like this, where we're going to look to enter above Friday's high, which was 93.78, and I would give this market a little bit of room on the upside, because we don't want to get caught in a false break. The low was at 92.96, the close at, or pardon me, the open at 93.04. So we could cover anywhere near the low or near the opening price. Somewhere down here anyways would be safe. Our profit target, well, we have 2 profit targets. We have the resistance at the 20-period moving average, which looks to be around 94.75, and then of course we also have the trend line resistance, which is cropping up here. So let's take a look at what this is going to look like dollar wise. and we would be looking to risk about $1,100, a little more than $1,100, with the potential to make almost $1,100. Now, once again, I probably would not risk it quite that far, and I'd get a little bit more serious about taking profits, say, maybe just before 94.50. So our trade would look something like this, where we're in above Friday's high, try to take profit before 94.50. Remember, this is a counter trend trade, so it is a little bit more risky, and we would cover the trade if the market in fact does engage us and reverse on us. And that is your weekend market update for the currency market.